Welcome back, everyone. We have an update from Altima Resources Ltd. It trades on the OTC Pink sheets under the symbol ARSLF and on the TSXV under the symbol ARH. It's a junior energy company engaged in the exploration and development of petroleum and natural gas in Canada. The company operates in the petroleum and natural gas industry. Happy to welcome CEO Joe DeVries. Nice to see you, Joe.
Nice to see you, and thank you for having me.
All right, give us an update, and I'll come back when you're ready for some questions if we have time.
All right. Thank you again. We are a small oil and gas company in Alberta looking to increase. Over the last year, we have gone from a very small amount of production, accessed some fields that we feel strongly can be exploited, have existing production, and we have proven that over the last 3 quarters by bringing them from into 400,000 a quarter to now probably this quarter above 1 million in revenue gross, and to profit after operating and after depletion and accretion are added back ahead of G&A. So that's a big start for us. We're focused primarily in the red earth area of Alberta, which, if you're familiar at all with things in that area, is basically centered between Peace River and Fort McMurray. So about the mid of there, about 4.5 hours north of Edmonton, Alberta. It is a remote area, but well supplied by a lot of industry, either supported out of Peace River or Fort McMurray, has full camps, and really is where we have seen an opportunity to grow. We're also in the Chambers-Ferrier district, which is well known for liquids-rich gas, principally drilled horizontally now. Peyto's in there, Taka's in there, and Cana's in there. We have 2 producing wells in that region, but are not focused there given the capital development cost. When you're at $8 to $12 million a well and you're a small company, it's something that probably, even though we have a lot of knowledge, is not the best exploitation of capital at present. We then have existing production supported in Twining, as well as a new one in Gilby, which came in with our recent acquisition of Primrose and Roxana. All of those are principally non-operated assets generating a small amount of revenue, which just simply helps the balance sheet. We're looking at a strategy really of focusing where we can expand utilizing existing production to hold sections, hold acreage, and where there is growth potential either through underlying formations or redevelopment and infill opportunities within a mature field. Largely fields that we're looking at are fields that have a low decline rate, are still in primary production, meaning they're not water flood situations or some other type of secondary recovery. They are in a situation where either through recompletions, improvements in the manner in which they're produced, and or, as I said, infill or now horizontal drilling, you can dramatically produce increased production over time. Also strategic in this for us is looking at companies either of similar size and or larger, but maybe not strategic for the principal that owns them, to acquire on cash flow basis that makes sense, that again, added to what we already have in infrastructure and expertise, will increase our rate of return and our production. Our goal is to get ourselves beyond 1,000 barrels a day by this time in 2025, and believe that we have the strategic acquisitions at this point and receptivity for those, that we will be able to attain those marks. So that's very encouraging for us. There again, as you see, those are the 3 principal areas with what we are producing out of them today. When it says 7 wells, those are now all producing, as was disclosed in our last news release, as well as doing the rework in the Twining assets, which are, I believe, the ones under Roxana, which are now also producing. So that's about it there. On this side, corporate snapshot. This is what our cap structure looks like. We have about 50 million shares issued and outstanding. And one of the things that has happened, everybody always asks, why are you carrying as much debt as you are on your balance sheet? Well, largely that is friendly debt. It is owed to myself, Stephen Watts on here, a couple of other principals. And our decision was, as opposed to printing additional shares, to carry the debt as friendly debt. With revenue growing, we feel confident that that will either increase the market cap and or put us in a position simply to pay it down and not affect our capital structure. Our capital structure to us is very important, as for the next phase of our life, we do believe that at some point here we are going to require a major capital investment, either by way of debt and or equity. And in all cases, we want to have that reflected in the share price prior to that happening. Management, well, we're all gray and old. Unfortunately, it seems to go with it. I'm being facetious, but we don't have anybody, I believe, under the age of 40 that hasn't got boots on the ground and hasn't been experienced. We do have some young people in the field, however, that we're really pleased with and we think will grow with the company. Primarily, they're under the supervision of Jamie Carlson, who is our boots on the ground professional engineer, phenomenal individual, doing a great job of bringing these fields to where they are now, comparatively to the prior ownership that had them. And the rest of our people there are, have the pedigrees and understand how to review the acquisitions going forward and are busy doing that at present. I realize this does not, I think that's about it on this portion. Certainly, I'm more than welcome to take any questions you have or anybody else has.
Great job, Joe. Talk a little bit about your expansion plans.
Well, thank you for that. We are looking right now at a strategic asset that is a non-core asset for a fairly large private company up in the Red Earth district. We are currently reviewing, we're under NDA. It is an asset that is, from our perspective, critical to what we are looking at. We had approached them to buy a portion of that asset, which is immediately adjoining where we produce the majority of our oil in that area. Our oil was going into their facility to be processed, and we were at the point where we had to make a decision about building our own facility. And I suggested, why don't we go to them to see if they want to sell that portion, since we're now 65% of the production, and take over the production and the facility and simply put our equipment into it, which we were doing. They came back and told us, well, you've hit us at a very good time. We are looking to focus our efforts and interest in Southern Alberta, and we will consider an acquisition, but we would like you to buy it all. I went, wow, okay. So we looked at it. We're presently looking at the production, the liabilities, the asset. The price negotiated to acquire the asset is extremely attractive.
All right, we might have some technical difficulties. We'll see if he can pop right back on. Otherwise, stay with us and we'll be right back.